now diagonals. Diagonals I had to learn because I was using horizontals so much, thinking that support and resistance was only based off of horizontal. So if you can see, I drew this line here. Here's old support. And then I would buy here at this price, and you would see it break through. It would stop me out, and then it would shoot right back up. It would hit this resistance level, and I was out of the trade and lost money. Even though it did exactly what I wanted, I would be so frustrated, and I know you've probably been stopped out 100 times. You get into the market, you think you're making the right trade, boom, you lose money because you got your stop loss and you feel like you got your stop loss too tight, or why did this happen, and you're a bad trader. And maybe there was just more information that you needed to see in order to make the right entry point. And so again, you got this support level here, so you enter, you lose money, hits your target, goes down. And again and again, it happens. So if we duplicate the line, we come down, we think, all right, well, now here's support, right? So we've got a support, boom, we hit, that's a low. It's a lower low than that low. So surely price is going to come in right here. I can buy, and it's going to go to the top of the range because that guy on YouTube told me every time I enter on support, it's going to go straight back up and I'll make millions of dollars. Wrong, that YouTube guy, I did not tell you that. Because again, what you got to notice is that we are in a downtrend. So I'm not telling you that just buying support in no matter what trend you are in, that it's going to go up and you're going to make lots of money. What I am telling you is I can show you little tricks, even like that. I drew this downtrend. Look, you got high there, you got a lower high, you got a breakout, and then what does price do? These lines are so valuable, and the more lines you can add together, the more confidence you'll have because you'll have more confluence, which means that more people are seeing the exact same thing. So again, you have a low here, you come in here, you think you're going to buy here at $20 and it's going to go straight up to $28 and you're going to make a lot of money. And then what happens? Price breaks this support level and goes down. Over and over and over again, this would happen to me and I would lose money. And then every once in a while, I would catch a lucky double bottom, right? So we all see that right here. We see that we have a double bottom, and what does price do? It takes off. So there's a couple ways that you can do this. You can say, all right, whenever I have a double bottom, then I'll enter into the market to confirm. But would this technically be a double bottom? And it broke down. Would this technically be a double bottom? And it broke down. So just to say that you can see a double bottom and that it always works, this was a double bottom, it didn't work. This was a double bottom and it didn't work. And that's when I noticed that diagonal lines helped me find a second confirmation. See, right here, we would have bought based off this horizontal line. But then you have this diagonal line says there's support lower and potentially even lower than that. And I think that's what we're looking for, is that extra aha. If I'm going to put my money on the table, if I'm going to put $100, $1,000, $500, $10,000, whatever you're going to put down. And the reason I don't know that you're doing $10,000 is because basically you shouldn't be doing $10,000 on one trade unless you have millions of dollars. You should be dividing up your trades into percentages. And so if you see, okay, now I have this diagonal support line with this horizontal support line, with this double bottom, with this breakout resistance, 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 breakout on a diagonal line, confirmation of a higher breakout on a diagonal line, then you can buy. And that's where I started to learn that diagonal lines are fabulous. The problem with diagonal lines is, how the heck do you draw them? Because most of the time when we're coming into a new area, like say this, we have a support line, we come in, support, 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 it breaks, how do we draw this down channel? And I like to use old parts, candlesticks from the past channel. So here's a high from the up channel. Here's a low on the up channel. Draw that in and then extend it and see where it goes. Kind of now at this point in time, to me, this looks like resistance, right? I got a diagonal line resistance. I got a horizontal line resistance. And you just have to trust the information that you have based on the next higher low. And then you come in and you see that this makes resistance here, but you don't get the same resistance here. You're too far from your diagonal line. So you'd probably say, based off of this new information, I need to make my diagonal line a little bit tighter. And so you'd maybe come in and sharpen this up a little bit, pull it down too, and you'd say, now that makes more sense to me. I'm in a down channel, and both of these points come down and hit my diagonal line. Now you can duplicate this diagonal line because you feel like you have the right angle and come back to low, and see, it gives you a better position lower down. It's not perfect angle, and it's not always going to be the perfect angle, but let's take this next area. So price breaks out and it starts to go up. And what do we see? We see we have lows here, highs here, highs here. Draw a diagonal line, and let's see what it does. Let's put an extension on it and blow it back out. And we see that price doesn't come up there, but it gives us this good base for an angle. And so let's say we say, all right, well, let's sharpen it up a little bit. And so maybe we take and we move it up to this high, and based on results is what you'll see your diagonal lines start to do. Once you get the more confluence, if price came down here a little bit, maybe you'd say, well, maybe I need to move my diagonal line down a little bit. Diagonal lines are giving you overextension of the market. Say that with me. Overextension of the market, right? So price here, it comes up, it hits this diagonal line. It's a huge move. Look from point A to point B. That's an overextension, a huge move up into resistance. Comes down, gives you a huge move up into resistance. Comes down, gives you a huge move up into resistance, into this diagonal line. So diagonal line should be screaming extensions, huge moves. It should be screaming way outside of what a small move. It's not a range zone or stuff like that. It is a over exhaustion of price. Now you see that you have duplication. We basically take these highs and lows and we use that same diagonal line, and we can see that we have a confirmation. And that's what diagonal lines do, is they give you confirmation of other confirmations, right? So we have a horizontal line here. We have a diagonal line. It gives you confirmation. Horizontal line, diagonal line gives you confirmation. Neither are the greatest trades by themselves. We already learned back here on a horizontal line, you lose money. On a horizontal line confirmed with a diagonal line, you find more support. On a horizontal line with a diagonal line with a pattern, now you have something that you can build to take the trade. And that's what we're looking at. How many things you can apply to this support resistance to give you the confirmation to go ahead and buy in. So when doing a diagonal line, you come off of your old trend and you find the highs and the lows and you start there. And if we were looking at price just from this area over, we would see that here's a low, here's a high, here's another high, and extend that out. With a channel line, it's the same exact thing. It's just a difference in the tool that you use. So basically, you do high to low, and then it gives you the opposite side, and you just go from the low. So here's what I've kind of take away from, if here's my up channel, Based off your last trend, what highs and lows can you use to help confirm the new one? So here's a high. So I'm going to take it down into this low. I'm going to find this low here and come across, I have another low. Now say prices, has not come all the way down yet to this area. We'd be able to get some confluence. Maybe you buy in here, you see this resistance level, it comes back, it shoves price down lower. Based off of this candlestick, you'd say, my lines weren't that good. Let me try to adjust and figure out where the right angle is. Now we come down, we see that price in this angle looks a little bit better with the confirmation of the breakout. Now we had a down channel, so now we're looking for the up channel. So again, you just have to use the information that you have in the beginning of it, which I use the old trends. If you see that, basically, once you have the angle, you have to extend it out and you get confirmation, right? So here's the high, here's a high, here's another high. Price doesn't come down to a low, it comes down to these highs. Now finally it comes down to this low, breaks out, uses this breakout as resistance, goes lower. And that's about the same with diagonal lines or channels. It is a little bit of a guessing game. And price over time is going to show you, was it right? Do you need to adjust? Of course you probably do. Just like with anything in life, you can be driving down the road and you have to adjust as you go. It curves to the right, it curves to the left. It's okay to adjust. You're not going to be perfect. And that's why I say it's hard for analytical people to listen to this, because they're like, no, I'm going to draw one line and it's going to be exact forever. That's not the case. So what you want is confluence to confirm multiple lines to help you analyze correctly how to trade.